Welcome to Las Vegas Real Estate Now, where we believe in the 3 E's: educate, empower, and engage. I'm your host, Harvey Blankfeld of the Brown Blankfeld Group, selling homes in Southern Nevada since 1988. We are very proud to be part of the Real Estate Radio Network. Like them, we are dedicated to delivering timely, balanced truths about local market conditions. We not only share our experience and knowledge, but that of our expert contributors. With Shelley and I in studio, we have Kari Phillips from Southern Fidelity Mortgage. She's been a mortgage loan officer for over 16 years. Welcome, Kari.
Thanks for having me again, Harvey and Shelley.
We wanted to talk about the scary subject, adjustable rate mortgages. For the right person, this is a good way to go.
For the right person.
When you do an adjustable rate mortgage, you get it fixed for a period of time, but then it's going to change after that time, right?
ARM, that's the acronym for an adjustable rate mortgage. And there are 3-1 ARMs, there are 5-1 ARMs, 7-1 ARMs, and 10-1 ARMs, a couple others. But a 3-1 ARM, the rate's locked for 3 years, and then after that, it adjusts once a year.
For those 3 years, am I going to get a rate that's lower than the current going rate?
Yes, you will. Let's say a 30-year fixed rate is 4%. An adjustable rate mortgage will probably be about 1% lower than that. On a 3-1 ARM, probably rates are around 2.75%. On a 5-1 ARM, it's about 0.25% higher than that. So it keeps adjusting up and up. Underwriters take the approved rate and tagging on 2% to that. As a qualifying feature. The underwriter's responsibility to make sure that in that first adjustment, the client can handle it. They can pay it based on the income that they had when they first closed on the loan.
Is there a limit per year that it can adjust?
In the first year, it can increase or decrease to 2%, but can't go above 5% in the lifetime of the loan.
You haven't done one in a long time.
I mean, it's not Southern Fidelity Mortgage. We have all the products.
There's fear.
There's fear. What happened in 2007? 75% of my business were ARMs. They were thinking at the time, because we're in such an appreciating market, I'm going to just refinance in 2 years or 3 years, and I'm going to go into a fixed rate mortgage at that time. Well, the people hadn't planned ahead of time. Can I make the payment if it goes up 5% in that lifetime cap? If you can handle those payments and you've got savings, then go for it.
Do I know I'm going to be in this house no more than 5 or 6 years? Then let me just get a 7-year ARM. I'll keep that low rate the whole time and I'll sell it before it ever adjusts. I don't want my listeners to think that an ARM is that scary that they just totally ignore it.
If you're only saving 0.25%, that's the only time I'm thinking maybe don't risk it. But if you're saving 1%,
but it's not for the faint of heart.
No, it's not.
No.
Be proactive in finding out the information up front. What can happen in the future?
Some of the savviest buyers are investors, and this is a product they should consider as well. It'll help them make that monthly expense a little bit lower, so that the rents returns will be a little bit better, right?
Yeah. The last adjustable rate mortgage I probably did was for an investor. When we locked it was way less than the 30-year fixed, and he was able to make his rate of return a lot sooner. And that's why he did that adjustable rate mortgage. It's almost like a fun savings plan.
What, I'm prepared to handle 7%, but I'm going to live with 3 for a while. Going back to the owner occupants, does FHA and VA, do they have ARMs?
They do. It's really an 1/8 to 1/4% less rate. It's not that much. Comparing fixed to ARMs, put it in front of you on paper, then you make the decision. You're in control of that. A person could take that difference and even pay it down on the principal. If you apply one extra principal payment a year, principal and interest payment, guess how much you're going to save off that mortgage? 4.5 years, 5 years. So lots to consider. Thanks for listening to Las Vegas Real Estate Now. Please tune in every week and help us heal the Southern Nevada market one home at a time.